You were listening to chartingwealth.com for Wednesday, the 2nd of August, 2017. We see that stocks are up for the day, both the S&P 500 and what we affectionately call the Qs, which is the NASDAQ 100. We see that TLT, the 20-year bond fund, up about 0.5% for the day. Gold barely down. Now let's dive into what's really going on. We look first at the weekly chart on the S&P 500. We see that we have about 4 weeks of up movement, but we don't have a crossover yet. We almost have a laminated signal line and price percent oscillator, derivative oscillators continuing to gain energy. But really for the past 3 weeks, the market's been somewhere right around 247 or so on the S&P 500. What's going on? Well, the energy in the market is trying to move up, but it's just not there yet. We do see the derivative oscillator, but we don't have that energy reflected in the MACD. Now, as we delve in a little deeper into the 2-day chart, we can see that the market's really been flowing sideways, going on 3 2-day candles. So what's happening here is the market strongly moved up starting on the 18th and then the 20th. These are 2-day candles. Slowed down a little bit on the 24th and peaked on the 2-day candle ending on the 26th of July. Then we had a red spinning top. That means a lot of indecision, trending down. And now what we have going on with this latest candle is we have, we have a green spinning top, which means that energy is trying. Again, as we finish this 2-day candle, we have a green spinning top, means that energy's trying to move up, but the price movement's just not there. What do we see going on the PPO? Well, the price percent oscillator's moving sideways, tending up a little bit. Derivative oscillator's losing its energy. And as we delve a little deeper into that 4-hour chart, what do we see? 4-hour chart's in a confirmed down move, having crossed over in the afternoon. Actually, it crossed over before. Crossed over in the afternoon of the Wednesday, the 26th, and has really been sliding sideways for about 3 days, 2.5 days or so. So what is going on with this market? It is having a hard time sustaining the bump up. Now, can it get some legs and some traction once it digests more things? Yes. It can. However, we're still in a confirmed down move on that primary chart, the weekly chart. Remember, all things being equal, the market tends to move in the direction of the largest chart. It crossed over going down back on the 23rd of June. Then what did it do? It went down for 2 weeks and then shot up, but that energy wasn't enough to do a confirmed crossover going up. What does it mean? It means the market just can't quite get its legs behind it. So what do things tend to do? Well, entropy, tends to, what happens when a rocket doesn't break out of the stratosphere? It falls back into Earth's gravity. That's what happens with the market. Not making a forecast, just looking at what we see. If we see this market gain legs, the 4-hour chart takes off, the 2-day chart continues to move up, and it pulls our MACD, which is our PPO, virtually the same thing, calculated a little differently. The PPO is actually, in the long term, more accurate, and you can compare across the board. You want a good training on it. We have a great training on the price percent oscillator, but we look at that MACD slant PPO, and that is our primary indicator. And again, it just can't quite get legs. So we'll continue to watch. And when a trend is established, and we're really trendless at this point. If we had to call anything, it's down. But again, we are primarily trendless. We're waiting for a trend to develop. When it does, my friends, we'll jump on it. So let's move on from the S&P 500. Go a little quicker when we jump into the Qs. It's still definitely in a confirmed downtrend. You can see it. It's not as close as it is on the S&P 500, and the derivative oscillator is still in the negative. All the derivative oscillator is losing downward momentum. Again, that price is still dragging out for 3 weeks going, right at about, 144 something is about the high, 144 on the NASDAQ 100. So continue to keep an eye on the NASDAQ 100. See what the 2-day chart is doing. It, of course, is in a confirmed down move. However, it's losing energy. In fact, the PPO is actually moving down. Signal line's moving up. And the derivative oscillator's losing energy. So again, keep an eye on that. What's happening with the 4-hour chart, the smallest chart? It's been going down since it actually crossed over going down in the afternoon of Tuesday, the 25th of June. It did have a pop-up point, but again, it's been going down since then, going down in earnest since Thursday, the 27th. So again, keep an eye on these things. When we have a trend established and we have the 2-day moving in the same direction as the weekly, then we'll wait for that back up on the 4-hour and a jumping in point unless, well, yes, that's what we'll be looking for because we already have a weekly vertical crossover that's previously been signaled. So we'll keep you posted. We'll just continue to watch. Remember, it's not bad to watch. If there's nothing to trade, you don't trade. First rule, don't lose money. Second rule, make money. And we always trend follow. It is the safest way to do things. Okay, next. And it's the most profitable, I believe. Okay, TLT, the 20-year bond fund. What's going on with that? It peaked out right around the 30th at the end of June. And what we, of course, see going on since then is we had a down and February up through the middle of February, a down July. I don't know where I got February. And then we saw the market slide sideways since then, tending down. Hasn't crossed over going down yet. Derivative oscillator sure has. Derivative oscillator went over going down back when we got a red spinning top, meaning lots of indecision. Believe I said at that point, you can check me, but I believe I said that red spinning top tending down, and of course with the derivative oscillator, not surprising, it continued to move down the following week, but again, still not enough down energy to make it crossover going down. You might say, why is that not happening? I would postulate, theorize, the reason it's not happening is because the stock market, remember, bonds tend to be inversely related to the market. Market goes down, bonds go up. Why? They're a safer haven when the market's not doing good. When the market is doing good, well, don't make the little amounts you can make in bonds, put your money in the market. That's sort of the investor psychology there. So what's going on? Well, since the market can't quite find out if it's going up or down, bonds are just dragging sideways too. If the market takes off up again, you can expect bonds to cross over and go down. If, however, the market drops, you can expect bonds, since they're already in a confirmed up move since all the way back in, we had a crossover back in February, back on February the 3rd, then of course bonds can be expected to take off again. Let's look at the 2-day chart on bonds. What do we see? Of course, it crossed over going down back on the 3rd of July. Had a little bit of a reprieve there in about the mid-month or so, and then, of course, it's now started dropping over. So we'll continue to watch. Let's look at the 4-hour chart. Of course, the 4-hour chart has crossed over going up. Will that be strong enough to move the 2-day chart over into an up movement to set us up for a potential trade? My friends, we shall wait and see. We don't have anything to do at this time except to do that. It is the smart move. Now, what's going on with gold? Well, gold crossed over. So far this week, it has crossed over going up. We haven't sent out an alert on a weekly vertical crossover. Why? Because the weekly candle is not drawn fully until Friday at the close of the market. If indeed it crosses over going up, we will, of course, give you that reminder. It has not yet. It is trying to cross over, but again, we're only through Tuesday. Wednesday, Thursday, and Friday could be down, and of course, you would see it disappear. So until the candle locks it in, we don't have it. 2-day chart, what's going on there? The 2-day chart is, of course, in a confirmed up move since the 24th, Monday, the 24th of July. And of course, we've got a lot of up candles as gold bottomed out somewhere around about 115. And of course, those of you who follow gold with us, you know that our 4-hour chart is our big money maker. And again, virtual money maker. We are not a stock calling service. We're an education firm. Do not give market advice. We want you to train with us doing virtual trades and practicing until you get super good at this. Then you can make up your own mind. And in just a minute, I'll tell you what you need to do to really put your training on afterburner. So what do we see happen on this 4-hour chart? Rotated over, going up back on the 12th of July. And of course, that 4-hour chart is just our prescient, beautiful, crazy good chart. Would have gotten you in somewhere after that candle closed at the opening of the next around 116. And of course, as high so far as 121.14. Beautiful. If you jumped out anywhere along the line, like when it looked like the market had topped out and started to roll over somewhere around 118 or 119, hey man, don't sweat it. You made $3. If you hustled and stayed in and sweated it a little bit, watched it move back up again, and then you saw it start to peter over a little bit around 120, that's not a problem. If you jumped out somewhere around 120.57, something like that, still not a problem. And of course, up now as high as 121.14. So again, it is starting to turn over again. How many times will it bounce off or get close to the red signal line? Don't know. We'll note, of course, derivative oscillators losing energy, but the derivative oscillator went all the way to the red back on the afternoon or the morning of the 26th of July, and then it turned around. So keep your eye on it. If it rotates over on that 4-hour chart going down, get the hell out. If it doesn't and bounces off again, if you've not gotten out before then, hey man, you're just trading virtual money. Let it ride, learn from it. Okay, those are the charts as we see them at the close of the day on the 1st of August on Tuesday. For our market report, our daily market report on Wednesday, the 2nd of August. Told you I'd tell you how to supercharge your training. What you need to do, my friends, if you've not already signed up for and aren't already receiving our daily market review, you can do it for free. Nothing that we do costs you money. We're not selling things to you. We are going to be selling our trade journal here in the future, but everything that's in there you can get for free. How? All you have to do is go to our website, chartingwealth.com, put in your first name, your email address, and all of your information will be with us. That is your email address and your first name. And we will send you every day the video review that we do. In addition to that, you'll get our How to Read a Stock Chart video that gives you the down and dirty on just what you need to start with us. Everybody always wants to make everything more complicated. What books do I need to read? What seminars do I need to attend? Man, listen to the 15-minute How to Read a Stock Chart video first. Then download what we give you for free, the layout that we use at freestockcharts.com. We're not telling you to go out and buy some stock service at this point. Just download our layout, and the instructions are there for the layout that we use at freestockcharts.com, and then print out copies of the trade worksheet, the daily market worksheet, and the weekly market worksheet. Fill out the weekly market worksheet over the weekends before the market opens on Monday. That's basically for your Monday review. And then on Tuesday, Wednesday, Thursday, and Friday, you fill out the daily worksheets. That will supercharge your training. And then when we start talking about trades that are appearing, we want you to use the trade worksheet, fill that out as you get into trades, as you watch trades, as you keep up with what you're thinking while things are going on, and the indicators, what they're doing, all that stuff. And then it'll help you record your profit, your losses, and also your thoughts as to why you did what you did and what you learned. If you will fill out those 3 worksheets, and the other bonus is you can find at the website, we have trainings on how to fill out all of those. In fact, if you go under training, it tells you how to use the daily market worksheet, how to use the weekly market worksheet, and how to use the trade worksheet. So if you only have a few minutes tonight, print yourself out some of those daily worksheets, which you'll use up through Friday, and go ahead and start filling those out. Listen to the training, see how we fill it out. Listen to that 15-minute How to Read a Stock Chart video, and then just start working with us every day. 10 minutes. That's all we ask. If you're interested in having true abilities in the market that could be worth millions of dollars, could be early retirement for you, could be wealth beyond your imagination, you know what most people are going to do? They're not going to do it. How do you get to Carnegie Hall? Practice. Do most people get to Carnegie Hall? No. Why? Because for any number of reasons, they don't practice. They don't put in the time and energy and effort. And all we're asking is 10 minutes a day. If you care enough, do it. If you don't listen. You're wasting your time. Oh, maybe you just like it for infotainment. And if that's all we are to you, enjoy. Okay, my friends, I hope we're a hell of a lot more. God bless from the whole team here, because we are rooting for you. And we do believe you can do this. We know you can. All the best from the whole team here at chartingwealth.com. God bless, my friends.